Hi dear traders! Markets closed last week on a rather optimistic note. The personal consumption expenditures index in the US revealed a slowdown in inflation. Amid this news, US stock indices showed gains while the US dollar lost ground. The US dollar index, which demonstrates its value against the basket of 6 major currencies, closed the week at the opening levels, losing its early gains. At first, traders were buying the greenback, encouraged by Fed Chair Jerome Powell's comments about 2 more possible rate hikes by the end of the year. Yet on Friday, it was revealed that the personal consumption expenditures index reached its lowest level in nearly 2 years, meaning that monetary tightening can be stopped soon. The probability of another rate hike in September has dropped to 21% from 25%. For the week, the US dollar saw just a modest rise of 0.11%, ending up below the level of 103. In the meantime, the data in the Eurozone came out mixed. Headline inflation eased to 5.5%, while core consumer prices went up to 5.4%. In this case, traders know what to expect from the European Central Bank. The regulator is likely to raise the rate in July and September. These expectations keep the euro afloat. The euro-dollar pair is consolidating near the level of 1.09. The British pound hit its 14-month high at 1.2850, trading against the US dollar. However, later in the week, the quote declined well below the recent high and was seen at fluctuating at 1.27. Investors are worried about a looming recession in the UK, as the Bank of England has been acting aggressively in recent months. The central bank governor Andrew Bailey said that last week's rise in interest rates reflected a resilient economy and unexpectedly persistent inflation. In June, the Bank of England lifted the rate by 50 basis points and expressed its intention to continue the tightening cycle as inflation in May remains steady high. Yet, given the trajectory of the pound-dollar pair, traders are not so optimistic about it. Meanwhile, the Bank of Japan is determined to keep its monetary policy unchanged despite inflation still running above the target level. This is done to support local businesses, and such a stance goes in sharp contrast to other global central banks that regularly raise the rate. Against this backdrop, the Japanese yen is depreciating against the greenback. Last week, it dropped to 145 per US dollar, the level last seen in September and October 2022, when the Japanese monetary authorities conducted currency intervention to support the yen. But for now, the Bank of Japan officials are only making verbal interventions and expressing their concerns that a weak yen threatens the Japanese economy. Gold also lost its value after Jerome Powell admitted that at least 2 more rate hikes were possible this year. At one point, the price of the precious metal dipped below $1,900 per troy ounce. However, following the release of the PCE data in the US, gold bulls returned to the market and pushed the price back to $1,920 per ounce. It seems that oil traders had an entirely positive week. Thus, BRENT crude found a foothold near $75 per barrel as the market continued to evaluate the supply and demand balance. Oil's upside potential is now limited by a slow economic recovery in China, fears of a recession in the US, and a stable crude supply from Russia and Iran. Besides, all hints by the central banks to tighten monetary policy weigh on the market sentiment. Oil may find support in the third quarter of this year from Saudi Arabia, which is expected to extend its voluntary cuts of 1 million barrels per day for another month in August. What's more, the U.S. Department of Energy plans to purchase about 12 million barrels of crude oil to refill its strategic petroleum reserve. These are the trends of the last trading week. Do not miss our daily news reports to be always in touch with the latest events. See you!